Okay, guys. So again, today is the 25th of November, around 3:06 p.m., and we're gonna start with a regular weekly seminar. Yesterday, as always do over the weekend, we update the whole charge going from 1 hour to the weekly charge. On the street, I mean, no big change in the BIOS. The BIOS remains to be the same. The only thing that not really is a big surprise is the idea that the euro yen can be in the big correction like the whole yen pairs. All right, that's the only honestly big surprise. In some degrees, big change on the weekly charge. The rest remains the same. Now, going down a little bit like to the 4-hour charge, I want you guys to understand one thing. The market, like we always say, I mean, the market, no always, people, we always say, and we've been saying, and we say over and over again, that sometimes you got to step the foot out of the pedal and you got to stay on the side a little bit for confirmation. This week should be one of those 2 weeks. One of those weeks that you got to get a little bit slow until you get what you're waiting. Otherwise, like many times happen to retail traders, they're going to get burned. All right? What I'm trying to say with this is this. Over the last week, the risk on trade did a move. As you guys see right here, we can see two symbols, if we can call it, two instruments that, I mean, that represent risk on. This is the US dollar here. This is the S&P 500. The S&P 500 bounced here, and the dollar, of course, soared over here. Now, what I want you guys to understand is that the magnitude of the bounce in risks have not defined yet which one of the two paths the risk trade is going to take. So that's going to leave you in, let's call it, a situation that if you are a smart trader, you stay out a little bit of those indices until some sort of definition is going to happen. Many traders have been asking us in private, even in the room, that if the S&P is going to drop. In other words, if it's going to make a pullback. Yes, there is no straight line in trading. If you take a look, over the last, contracting the charge here, the last bounce do happen here, and look, he can run, but he always gonna pull back. The same is gonna happen here if that's gonna be the case. There is no straight line in trader. That's something that people need to understand, that you never chase the market. All right? So, the situation comes in the idea that the S&P is okay in the way that it retreat almost the 618 of the rally from June 4. The dollar went to the 50, but it has not created enough momentum to break this trend. In other words, nothing said that the S&P cannot trade lower. Nothing said that the dollar cannot trade higher. Either way. But nothing either say that this cannot be the bottom. Nothing say that this cannot be the top in the dollar. So that's going to leave you with a 1 hour trend that is completely risk on, and the 4 hour trend which is risk off. So like we say over the last week, when that happened, you got to stay either on the side, or you can play the internals within the structures in trying to make some small move, but not thinking too big. For example, the euro last week, it gave us a very nice sequence where right here we knew a swing is going to happen, and that is going to go more outside. Things like that, you can take it in this type of market, but I want you guys to understand one thing. Nothing has said that the downtrend in the dollar started. Neither nothing has said that it can get into the double correction. Anybody understood that? Usually in our math system, we should know pretty soon where we stand. We run yesterday about 118 charge is what we do over the weekend. And we didn't get a crew that say, we didn't get a crew if the bottom in risk off was already in place, and we're going to continue to go higher in risk on. We didn't get a clue about it. There is no clue on the market. So what I can tell you guys is at this stage, we don't recommend chasing the risk on trade. It's well extended, and a putback is going to take place, and the nature of the putback is going to dictate where we're going. Anybody understand our view right there, right? We have a 1 hour bullish risk trend, but still the 4 hour is bearish. Consequently, you have to, you gotta be careful. Our system is like nothing that you guys ever seen, and it's proof one day after the other that when we say the change trend is really change, and it hits our target. So with that in mind, all I can tell you is that we gotta be careful. We have to be careful, because at this day, thinking of chasing the risk on trade, it can be dangerous. It can be dangerous. I would rather wait for the pullback. I would rather wait for the pullback and see the nature of the pullback, and then I decided where to going. I believe that's matter that being a chaser at this stage. We trade in Elliott Wave forecast. We trade based in confirmation, in mathematical confirmation. We don't trade based in illusions, neither in a strong move. You see that candle here. That candle means nothing. It is strong, yes, but it means nothing. The trend has no change in the 4 hour. The 1 hour is bearish, the dollar. The daily is bearish, the dollar. But to be sure about it, we gotta wait for the 4 hour to change. Otherwise, those two scenarios, they're still possible in the US dollar index. All right. Now, That's the US dollar in the 4 hour. In the 1 hour, I want to see the test of the 80.01. If you guys look at it in the trend report, that is, I mean, 1 second, let me log in. I mean, if you take a look at the trend report, that's been the 1 hour target for over 10 days. We knew that it's going to go there. We knew that it will go there. That's the minimum target in the dollar. It's going to happen a bounce, guys, either from this area or from this area. It's going to be a bounce. The nature of the bounce is going to dictate if it's lower or it's going to go to the 82 area. Nobody knows. Mathematically, that's how it looks like. So sometimes you gotta wait, all right? And like here, it was a great sell in the dollar based on the euro, because the euro right there, it was showing 1, 2, 3, but it didn't. They are not stupid either. They didn't make the deeper pullback that we were looking to go long. That's how they are on the street. So at this stage, we gotta wait. You see the euro, how strong it's gone, is in everybody land. You see how strong it is? It's to 125 tomorrow or this week. Same way, it can confirm that it's gonna go to our target of 140 area. All right. So keep your mind open. Bottom line is that it should be one second, guys. You guys having issue with the audio? I see people typing there. Okay, 1 second. Let me switch the mics. 1 second. You guys hear me better now? It's better now? Okay, so let's continue here. Technically, like I was saying, I'm going to try now. You guys should have told me. I didn't know about it. It's a wireless mic, and I don't know why it's not working that good. But well, let's continue. This is the euro yen. I'm going to explain to you guys now over the next 5 or 10 minutes what the euro yen is telling to the market. This is the euro yen. The euro yen is doing, it has, as everybody knows, a great correlation with the euro dollar. Okay? It can be, it has, as you guys see here, a great correlation. The bottom on July 24, the top on September 27, the bottom here on 11/13. If you take a look at the euro yen related with the euro dollar, this is a significant top right here, because the dollar, the euro in blue has not broke that level yet. The euro yen broke it here and it took it away over here. All right. So what does that telling you? That telling you that this is a cycle and that this is a new cycle in the euro yen. All right. So that give you some sort of support using the correlation market that the euro dollar and consequently the dollar also can have found a top over here. All right. And then that the euro dollar can have the low right here. We have a proportion trading idea at 126.20. It never got filled. So, but we don't have confirmation yet in the case of the dollar or in the indices. But looking at the euro yen from the same day that the euro dollar bottom, the euro yen bottom here. Now the euro yen is taking the form of a five-way move over here. It's a five-way move. Now that five-way move should end sometime this week. After a five-way move, we're gonna get a pullback. So that's why we are not using as a principal count the nest in the euro dollar, more like a double zigzag, is due to the fact that we should expect a pullback. Listen, this is a 600 pips rally in the euro yen over the last 2 weeks. We should see some sort of pullback. When that happens, of course, the euro dollar also is gonna pull back. This count in the euro yen is telling me that most likely the euro dollar has a bottom, but we don't have confirmation. But also it's telling me that the euro dollar in some degrees there should be, and this is the central meaning of the seminar, guys, that I want you guys to learn over this seminar. There should be a pullback in risk this week. There should be a pullback in risk this week. The risk trade should pull back this coming week. And the nature of the pullback is going to tell us if the euro bottom at 26.60 or the euro goes to 125, 124. I'm sorry, 126. We don't know. Nobody knows. If somebody said to you it's going to happen, at least in my opinion, they're lying or they're holding a bias. All right? We got to see the pullback nature, and then we're going to decide it. But if you downgrade this chart to a 60-minute chart, you can see the correlation between both of them. This is the euro yen. The blue one is the euro. Now, if you take a look at the RSI, you can see a big divergences in here. You can see how this was your first divergence high. That's one. This was the second, and we are the three. If anybody that took the class, you guys know, if the body, like Jason, you know what I mean. That triple divergence in a move, that means that the move is very extended and it's a modus wave, right? So that means that it should be a pullback, some sort of pullback this coming week. That's what I say. Chasing the euro dollar or the dollar or the S&P or any of those risk instruments at this stage is very risky. So if I was you guys, I would stay out of the market because you cannot sell it neither. You need confirmation either side. Right? You should stay off the market until it give you confirmation. That's being a professional trader, guys. No cowboys that want to go both sides of the market. Remember, you don't trade against the trend. All right? So, also, if we get back a little bit higher in time frame here, and we're going to put now the dollar yen. The dollar yen from this low is showing a 5 swing, not a 5 waves, a 5 swings. I know that some people, they label this 1, 2, 3, 4, 5. They don't know what they're doing. This is either 1, 2, 1, 2, and wave 3 is taking place, or this is ABCWS, ABZY. But the dollar yen is telling you that at least in short time frame, I'm talking about 4 hours, there is another swing higher in yen index, which means that is supporting our idea that the euro yen is gonna end it this move and put back, and then both the euro yen and the dollar yen, there's gonna do some sort of pullback, another rally to the outside, and consequently you link the euro with it, and you're gonna get some answers there also. All right. So the most likable conclusion that you can get out of the market is that the rally in risk from November 13 area is about to end, and some sort of pullback is going to happen. That pullback is going to define if it's going to be, for in the case of the euro, to around 128 and higher, or it's going to go all the way higher. You guys need to wait, Raul, for us to let you guys know. You guys, something maybe do not understand that is because you guys do not have our system. That's why Elliott Wave forecast exists. Our system is going to let us know ahead of time where we are. Because if you guys that took the class, you guys should know something. That the B wave always is going to test, is going to try to run in favor of the old trend. In other words, if you take a look at the dollar here, this is a B wave. Why? This wave, this swing was trying to run in favor of the trend. This can be another B wave. A B wave always going to give you the impression that the old trend is going to continue. Now you have to wait, and you have to sit in your hands and wait like the market did over here that defined that this is a B wave, and we knew that it's going to go to 81.35. The same is going to happen in this pullback. This pullback, when happen, is going to let me know if the market is going to go to 82 or go all the way to 77. Until then, we cannot give you the bias. You got to be smart, control your cowboy habit, let's put it like that, and don't try to chase. Don't try to go either way, because you guys can get burned. Many people here believe that it's going to keep going lower, and they saw this. And we keep telling you guys it's going to go to 81.35. Well, the minimum correction here took place already in the case of the dollar. It didn't happen neither in cable, neither in the SWIX, neither in Norwegian, neither in the euro. And if it happened in the dollar, it's because the yen win next. And the euro that was pretty close. All of them, cable and Norwegian and euro, they were pretty close. But the rest, Swiss and Norwegian and the SIG, they are far apart. All right? In conclusion, a bounce is going to take place in risk off. That bounce is going to dictate which way we go until you guys are looking at the trend report and you guys see a pair like the euro dollar that is still, it has a downtrend in the 4 hour and an uptrend in the 1 hour. When you guys see that, you can ask Kelly there. It's going to let you know what you need to do, which is stay out of it. You got to stay out of it because it's very dangerous being playing those pairs. No need to rush, because if you try to rush it, what's going to happen is that you can get burned. You can get caught in a short squeeze and can cost you a lot of money. Everybody understand that, right? Everybody knows what we're trying to say right there. If you do that, it's dangerous. All right? Listen, there is no need to rush. And this week, Andy, we should get the answer. This week, we should get exactly 10. When you get the same direction in the 1 hour and the 4 hour, that's a honeymoon. That's a classic move that I always say. When they're fighting, it's the first 2 years on your marriage. You're fighting every day. After that, what's going to happen is when they align, it's time for you to go to the ATM and get your money. All right? Not necessarily the daily. The daily is bearish, the dollar. Exactly, Andy. If you trade like that, you're trading like you are in the casino, playing the machines. If you look at the euro, it's bullish in the daily and bullish in the 1 hour. At the moment that the 4 hour become bullish, that's an ATM machine. That's a buy the dip, buy the market in any dip until it reach 139.57. It can go there in different ways. Doesn't necessarily needs to be in a straight line. But you know that you gotta keep buying it until we change it. These things, guys, is 99% sure. You guys should see it in an everyday morning. Every day that we change a chart, it goes to the target most of the times. So that's why you guys need to understand how to trade it. But this when you have an up and down, that's not good. That's time to move out of that pair. Anyway, if you take a look, and I could have put an example, if you take a look at the US dollar, you guys know that we are very bearish the dollar. The dollar can have a huge low high right here. And anyway, when we get confirmation, this is a move that is going to take the dollar at least to 76. So if you're trading at 81, why you need to be risking your money? Better wait. It should get confirmation this coming week. And we're talking about no Elliott Wave confirmation. We're talking about mathematical confirmation that the cycle ended. and then you buy the next pullback and you let it go. Look, the dollar Swiss is trading 93 and the target is 85. So we're talking about 800 picks. With a pullback, that's going to be 900. But you working in the top or in a strong floor. You don't work in a top or something like sleepy. You know what I mean? That's how you guys need to learn to trade. All right. Now, I want to mention and I want to cover for you guys the the 10-year treasury note or treasury bonds. I will never going to show you guys the system about the trend, guys. Never. I mean, I can show you how to train. I can show you. Thank you, Carlos. I can show you guys how to trade the trend report. But Jason, I'm sorry, my friend. There is no money that is gonna pay for what I've done for 11 years. I will never show that to nobody this world. Those are 13 rules that I developed myself. 13 rules of trading based in a lot of things. And that, I mean, you don't need to know that. All you need to know is when we change the trend. Like I always say, joking, and now I'm going to joke with you. The Coca-Cola company doesn't give you the formula. We're never going to do that, guys. Sorry, but that's how it is. Now, look, the 10 years treasury note. I mean, the 10-year treasury note. From the lows, they're making a modest wave. 5-way move. So that means the idea that we're getting 1, 2, 3, 4, I'm sorry, 1, 2, 1, 2, 3, 4, 5, 4, and 5. That's also supporting, Carlos, the idea, the 10-year, that is gonna be a pullback in risk. If you overlay this 10 years note to the S&P, there is no coincidence there. They are the same. You see what I mean? Now, taking a look at the 4-hour chart of these bonds, let me put the 4-hour, sorry, my bad. Knowing that we have a 5 ways coming out of the lows and that it went right here, it went to our target. That telling me that knowing that this things is going to need to go to 2 or 207, what it's telling me is I'm seeing 5 ways here that most likely, and I'm going to say the word most likely, the low in risk on is in place. Now, again, nobody has give you mathematical confirmation there of the trend change. I mean, nobody, no any instruments out of the 110 charge that we did yesterday is denying the move or the extension in risk off. But no one, neither has confirmed that the low is in. There are little clues that you can get, like the euro yen and the 10 years note. All right. So with that in mind, we got to be aware of the favorable path that we're looking for the week. We are expecting a pullback in risk. We believe that with the 80-20 ratio, that pullback should prove corrective and a big move that we are expecting until January 13 of 2013 is going to start this coming week or maybe next. But we got to wait for the math to say this is it, over, we're going higher. All right? So that's my presentation. Any question that you guys have about what we have explained, about the bias, what we're expecting is maybe a little more extension at the beginning of the week in the risk on, but should be a pullback of the move that started on November 13, sometimes this week. That pullback, that how strong it is going to dictate that continuation in the risk on or the extension in the risk off. I think it's very simple. If we take a look at the S&P 500, this is the two path. It's going to be a pullback. I guarantee you that. It's going to be a pullback. I remember last time, I don't know if the metric is there. The metric, you there? But always there. You remember what I was yelling to you, and I know you did, to buy the S&P around here. You remember that, right? Everyone was selling, and we were saying buy the S&P looking for 1465. You remember that, Demetri? All right. Now, getting back in time, we should be around here. We're going to get a pullback. And in the first reaction out of the pullback, the market is right here. It broke this high, mathematically. The real market, no, this is not the real market, guys. I want you guys to understand that. This is a face that they're showing to you. There is something behind this. And that's why and that's why we are running ahead of the crowd. Because we know in the real market what the market is going to do. Now, there's going to be periods that they don't give you the clue, that they are sideways, like Aussie, which is going to cover and like I say, there's going to be periods when the market, there is in both ways. But when the market define, man, this is a beauty. Because we knew right here that the market is going to go over here. We knew right here. Everyone was buying, and we was telling you guys that the market is going to go over here. But you got to wait. You see what I mean? So we are close to a confirmation that the S&P is going to go to 1545, 1575. The S&P is trading at 1400. It reached our target on Friday. Put it this way, Demetri, you know this because I know you were long. We told you, all you guys over here, that it's going to go here. Look at the trend report. What the trend report say, S&P, I changed it over the weekend. 14, it was saying 1410, 1409, the metric, right? Now can be a possible extension. But it was there. So, like I say, we are close. When you get the pullback, it's going to get back to 1380. And you're going to buy it if we say so. But you're going to put your start, your limit at the extension that comes at 1550, 1565 area. but we don't know yet if it's gonna go. We don't know which way of the two path that thing is gonna take. So you gotta have a lot of patience. Week like this is what you remember this, Demetrio. I always call this. This should be a definition week. We should get a definition this week. And that's overall in 80% of the instruments, that's what we're getting. All right. Now, I'm going to talk also about oil. The rest of the indices are the same, guys. They are in the same situation. Look, if you take a look at the DAX, it has not reached our corrected target. But this, it looks very strong and very extended. And like I always say, last week we say that the cycle for September 14 ended. But this is very strong. No, there was no seller at the 50, no seller at the 618, a little bit there. So that's telling me that either it's making a flat 3, 3, and 5, or the thing is done. Again, what you need is definition. So you gotta wait, because the market also can reverse. I mean, as far we need to wait, guys. Bottom line, guys, we need to wait for confirmation. Because if it's gonna do a flat and it's gonna stand lower, guess what? If it's gonna do this, we should know around here that it's gonna go here. So when you see Andy, because you've been around very active, there's gonna be periods that you sit down in your hands and you wait for the market to define. As far as the market define, it's a gift. It's money in your bank. As far as the market define, it's money in your bank. So don't be heroes, guys. Being genius, no heroes. Let him be for a second. And you guys should get some answer very soon for us. All right? Now, about oil, we keep the same bias, which is that oil ended the cycle from September 14. This cycle in oil ended. He's going to go to 92. He's going to get here. Let's see. Forget about the dance in between. This is all noise. This is all up and downs. At the end, he reached the target. All right? I mean, still, he can do this and this, or go straight higher. It's going to get here to 92, 90. It's going to get here. From here, let's see how it goes. All right? Now, I'm going to move on to the fourth spell. I want to show you Aussie. Give me 1 second. 1 second, guys. Okay, we're going to start with Aussie today. Aussie has been in a sideways move. 1 second, because I need to update the charts here. Give me 1 second. Aussie has been in the sideways move over the last don't know how long. It looks like it's going to start trending higher. All right. It looked like Aussie, in some degrees, as you guys know, we are bullish Aussie on the weekly and we are bearish on the daily, but it looks like it's possible that the 4 hour have turned higher again. And like everything, there are no straight lines, and it's possible that, remember, this move, it was a three-way move. So I believe that Aussie can keep going higher, looking for 106.26. Now, if you compare both structures, or at least a retest of these highs, if you compare both structures, right now we should be ending this move. We should expect a pullback this week and a continuation or extension higher sometimes during the week or next week. So Aussie, it looks pretty nice, but also it's going to be part of the pullback that the market should have sometimes this week. And Aussie is telling me on the daily chart that is gonna break these highs, and that at least is gonna retest this over here. So that's, in other words, in the 4 hour it becomes bullish again. So a pullback in Aussie is a buy against these lows of 103. All right, that's what we like in Aussie there. Now, but don't sell, guys. We don't recommend to sell risk. We recommend waiting for confirmation. So technically, we believe that it can go all the way to 105 and then a pullback again that is going to take it to 104, 103.97 again, and then from there can be a move to the upside. The rest, if you take a look at cable, we already covered the dollar, the euro, those pairs. This cycle ended. This cycle ended in cable. So either, but we told you guys over here that it's going to go to 160. Now, the target in cable, it is around 160, 62, 161.20, from where should be a pullback. And like every market, the pullback is going to define which of the two paths is going to get. Now, there is something that is called Elliott Wave aging. Elliott Wave aging is nothing more that when both sides, when I mean that both sides of the market, when both sides of the market align in once, when both sides of the market align, and when both sides of the market align, in that case, when we get confirmation that this cycle ended, there's gonna be an alignment in the whole market that is gonna look for an extension to the downside. Now, from this area, we should be in an Elliott Wave aging market, I believe, in some degree for the next 5 to 7 days. This is what Elliott Wave, no matter if you're bullish or bearish, you should decline here and recover in here. And then from here, market is when the market is going to define if it's gone or if it's going to get into the double correction. All right. Now, guys, let me show you also the dollar yen. The dollar yen, like I say, now that I can show you the charge better. If you take a look at the dollar yen is showing a 5-way move, of the lows. 1, 2, 3, 4, 5. So that's a 5 swing. Now, that's 5 swing, it needs extension higher. This is the best trade in the market, honestly, together with the Euro Aussie. But this is even better than the Euro Aussie. You need to start buying this pair around 80, 81. Now, this also can be 1, 2, 1, 2, and this can be a wave 3. In order for that to happen, you need to get a little more extension to the outside to around 84. But this is the best trade in the market. This is the best trade in the market. If you take a look, but if you put the RSI is telling you that there is no divergence from here to here, but there are 1, 2, 3, 4, 5. So you need a 6 and a 7, and that's why selling the yen pairs for another extension to the outside is a very good trade. That's better than the dollar, guys. But well, people always fall in love with the euro dollar, and the cable, all those pairs. This is much better, to be honest with you guys. All right. So, by not having divergence there, is a confirmation that an extension to the outside is gonna take place. All right. Everybody see that one, right? And that, like we explained at the beginning, and like we say at the beginning, the idea of the dollar yen asking for more weakness in yen, the idea that the euro yen correlate because it's a yen pair with the dollar yen, and also correlate with the euro dollar, and also correlate with the dollar, at the end of the day, it's very simple to believe that we're going to see an extension higher in the yen pairs, and also that's going to relate the same extension higher in the euro, the dollar, and other stuff. I don't know, Ronnie, if you have seen a video that we did for FSCN about 6 months ago. about the dollar yen. Have you able to see that one? That's the best one. I don't know, Greg, if you saw that we changed the daily target in the euro yen. I believe I mean, I'm going to explain the euro yen now, but in the case of the dollar yen, uh, this is the best trade in the market. And in the daily, it's going to go to here, running to 85, 84. But we told the whole world that when the pair was around here. We knew that. So you got to buy it here. You got to buy it there, looking for an extension. Look, I mean, around 84, 81 when you buy at 81. So that's a great trade. Now, about the euro yen, I've been for a while under the idea. Let me put the weekly chart here. I mean, buenas noches, Roberto. I mean, I know that the euro, if you take a look at the 2 euro dollar count that we're showing, both of them, they're very bullish against the whole world. The whole world is bearish. But for us in the euro, for us the euro is very simple. Either this is over like it is here, and then the euro is going to go to 180. Call me crazy. I know my good friend Greg, don't call me crazy. Or the euro is going to correct the whole cycle from 2008. I have no doubt about it. And it can go as high as 151, 146. I have no doubt about it. That's the euro. Both counts are calling the same. But now the euro yen is confirming the same. Mathematical, at least it looks like this cycle ended and has a target of 131. So I believe that when you relate those two together with the euro, with the dollar yen, it's a confirmation, Greg. And these people don't realize that this market is much bullish than what people give credit for. The euro yen, the dollar yen in our system is meant to do this. It has a target to correct the move to at least 100. Now, it ain't gonna get to 100 tomorrow. It's not like that. It's not like that. I believe that it's gonna end 8. I'm sorry, I believe that it's gonna end most likely. Greg reminds me, because I know that you remember the levels when we mentioned on the video FSCN. I believe that it's gonna go higher, and you should find a temporary low or top between 86.42, 88.60. It should find a top over here. Most likely there is gonna put back in 3 weeks and another rally, something like this. And then if you take a look at the euro yen, it's the same path. Very simple, Greg. Same path. So as clear as a water, eh, my good friend Greg? As clear as a water there. And then you do the math with the euro, with the dollar, with everything. So everything is very clear. We only need, we don't, I mean, the daily charge has been clear all over. There is no doubt in the daily charts. Daily charts are very clear. The question is that still you don't have the alignment between the 1, the 4, and the daily. So you gotta wait a little bit until you get that alignment. All right. Now, finally, I'm gonna talk. Look, if I'm gonna talk about the euro dollar in 1 hour. Okay, the euro dollar in 1 hour. I do believe I don't want to push the trend, the nest yet, because the internals, all the stuff. But I know for a fact that this is a cycle, that this is another, that this is another, and we are in another here. Either the top is in and the pullback is going to start, or it's going to do an extension to the 130.18 area, this area, and a pullback. It is bullish against this low. If we break this low, it's going to go over here. All right, so you got to wait. I like this. If you take a look at the RSI, you can see the cycles here. Maybe did the flat, another cycle. It looks like this is another and another here. So let's see, I mean, how it goes. Let's wait for confirmation in that one. Now, I got a question about Gore. This pullback is going to dictate if it goes to 26 or if it goes to 1234 and the first leg. Now, about Gore, Rafi, is in the same equation that the whole market. It's either in the B weight right here that is going to do a pullback and higher, or it's going to go lower to the 1630 area before higher. The recovery after the first leg of the lows from the beginning of the month is going to say where we are. This can be like this, or this can be a super nest. 1, 2, things like that. So again, it's the same everywhere, guys. You got to give the market some sort of days to give you more data and clarify if the turn in risk on happened. I mean, in conclusion, this is not the time to buy risk on. I would rather wait, and we'll let you know. You know, Rafi, already how it works. We'll let you know when the thing's going to happen. Anyway, Gore, for any pullback here, is going to go to 1880, 1900. No need for rush. No need to be a hero. Any question, guys, about any pair? That's all I have to say, to be honest with you guys. I believe and I hope that everyone understood our bias is that we are expecting a pullback in risk. In other words, we are expecting dollar strength some sort before Wednesday. After we should know, where we are, and we should know if I don't like selling. John, I mean, I don't know if you are new in Elliott Wave forecast. I mean, at least I don't recognize you for this for asking question before. And the euro dollar in Elliott Wave forecast, my friend, you're new. Let me explain to you. In Elliott Wave forecast, we developed a new system of trading, which is completely new to what most of the people are used in the overall market. We had developed a system which is based in Elliott Wave, is based in a momentum, RSI, and things like that. Many things. We don't sell here, even though I believe that I got a 1 hour trend to the outside. I got a daily trend to the outside, but still my 4 hour trend is to the downside. I don't sell there. I wait for confirmation of this cycle to be over. In other words, that the outside from here ended, even though I believe that for 130.18 can correct all the way back to 128.50. I don't sell it here. I wait for confirmation that the cycle ended, and either I sell the B way against the high, or I buy at the 50 here looking for 134, knowing that it's going to continue higher. That's the way we operate. We operate based in confirmation, not in illusion, because selling here is an illusion. You're selling against a trend. You see what I mean? You understand what I mean, John? Selling there is selling against a trend. You gotta use this report, my friend. The trend report on the side. This is based in math. When we change the one, I mean, we tore everyone on the euro right here in this candle. Don't sell it anymore. It's gonna go to 129. We're gonna let you guys know the same when this happens. That we're gonna send the 1 hour trend, and we're gonna say that it's gonna go minimum to some points from these lows. That's when you sell it. You see? Any other question, guys? You need to follow the trend. Ideally, you have to follow the trend that you trade. I mean, you need to follow. Ideally, you trade cooker. You trade when both trends align. In other words, when both trends align in one side of the market, it's a honeymoon. It's an easy market to trade. For example, we told everyone to sell the euro here. Both trend. Look, if you take a look at the previous, right now, you can be, this is the 1 hour euro. Right now, you can be over here. Nobody knows. Right now, we can be over here. Now, right here, you neither buy or sell. You wait. But right here, I remember me saying to everyone, at least now, it's going to go to 129.70. And the first pullback, you selling there. But I remember me saying over here, now it's going to go to 126. And you keep selling. I remember us sending orders to sell over here with here because the market aligned only to one side. You see what I mean? That's what we trade here. So when the both trains align, it's very easy. Now you can take trades. I mean, you can take trades in between. This is not a five-way, man. In my opinion, this is not a five-way. In my opinion, this is a seven-way move in some degrees, or a nest. So you got a 1 hour that is still bullish. You got a 4 that is bearish. My best buy was right here, better weight. In other words, you can be over here. The market can push and do this. You don't sell it or buy it at this stage. You wait for the break of the cycle, and then you sell the first 3 bags, looking for the 50 back here of the whole cycle. But until the cycle is not ended, you cannot sell it. And we don't have confirmation that this cycle ended. This cycle can continue to go higher. And even can do this and keep going higher. Why you going to sell it? Selling it is an illusion. And buying is kind of overstanded. And getting in the stochastic RSI is at the lows. So some sort of extension can happen to the upside. Look, I believe that we're going to get at least another ways out in the euro to 138.18. Now, the euro Aussie, look, the euro Aussie is like we explained the other day. As far as this low hold, guess what, guys? The next is the best count. If it goes to 123.40, should be a buy. I can count these 2 ways. Either this is A, B, and we're going to do a C, or a 7 swing that is going to take it to our target in 1 hour, which is 125. Or this is nothing more than 1, 2, 1, 2, and this thing is going to explode to the outside. If you ask me where to buy, I say 129, 123.40 area against 122.50. So that's my best guess right there. Any other question about any of the pairs? Of another count is that this is an ABC, like Gray saying, and we're gonna go do a pullback of the whole cycle to around 123. But well, you have to go great with the more aggressive one. The Aussie New Zealand, we don't carry that pair. So any opinion that I give you is not like the 20 something instruments that we cover. So disregard. It looks good. I mean, it's hard for us to give you an opinion. I mean, for something that we don't cover. It looks like it did ABC to here. I believe it's bearish on the weekly, looking for 121.15. Now, how we get there, I cannot guarantee you. But I believe that it's bearish in some degree. It has two paths. Either it's going to go to here or it's going to go here on here. I tend to believe that this low is going to break first than this one. Any other question, guys? Okay, guys, if there is no more questions, so let's leave it there. And we're gonna be around covering the rooms for the rest of the day, like we always do. And the recording is gonna be available pretty soon. Like I said, we believe that some sort of correction in risk on trade is gonna take place. And better wait for the pullback in risk on in order to take size on the market. The pullback should define which way we are. We are an extended move in the Aussie yen, in the dollar yen, and in the euro yen. That is move should correct. Consequently, there should be some sort of risk off in the market during the week. Let's see the structure and let's play the structure, and don't sell risk yet. Wait for confirmation that the cycle that started in the middle of November ended, and then you're going to have a much better trade. And oil, I see in a question, I like a long to 92. I don't know exactly which structure is going to get in between, but we like 92 as a target in oil. All right? Okay, guys, so work on again. Thanks, everyone, for being around, and see you guys later on. Thank you, guys.